Welcome to Money First CEO, the podcast for business owners ready to run their business like a boss and make their money work smarter, not harder. I'm Harman Johnston, bookkeeper, Profit First professional, business coach, and mum of two from Sydney, Australia. I've built a thriving business by mastering money habits and systems that create real freedom. This show will help you take control of your finances so you can build a business and life that truly works for you. Every episode delivers one powerful takeaway you can action right away for more clarity, confidence, and cash. And from time to time, I'll be joined by special guests, fellow entrepreneurs, experts, and real business owners, sharing their money wins, lessons, and insights to inspire your next move. Because when you put money first, you unlock the options and freedom you deserve. So hit follow, grab your coffee, and let's dive in. Hey there, and welcome back to the Money First CEO, where we put money first and the rest will follow. I'm Harman Johnston, and if you're a service-based business owner, coach, consultant, creative agency founder, strategist, then you're in the right place. Today's episode is here to help you build a business that's profitable, sustainable, and actually pays you first. This episode is going to speak directly to those of you who rely on others to help deliver your service. Could be coaches, freelancers, subcontractors, and maybe even a small team. You've got revenue coming in, but somehow it still feels like a mystery where the money goes. So if you've ever thought, why doesn't this add up? I'm working hard, but not seeing the payoff. I have clients, but I feel broke. Well, you're not alone and you're not doing anything wrong. You just need a system that fits the way your business actually works. So let's talk about how Profit First with one important twist can give you back control, clarity, and cash in the bank. So I'm going to start off with why traditional money advice doesn't fit. So let's be real, most financial advice you see on YouTube, read in books, or hear on podcasts was written for product-based businesses. You know, they're talking about inventory control, cost of goods sold, warehousing, margins based on volume, upsells, and average cart revenue. So all of that's great, but if you're selling candles or clothing, but if you sell a done-for-you service or a high-touch offer, none of that really applies. Your business model is different. Your value comes from your brain, your expertise, your experience, your team's ability to get results, but we still try to apply the same budgeting rules and wonder why we feel out of control. So no wonder cash flow feels messy. And what we end up with is inconsistent income, even when you're working non-stop, confusing cash flow where money is coming in, but somehow it's always gone. Feast-and-famine cycles where we go from overflow to, oh crap, and a general feeling of burnout because we're doing everything and still not paying ourselves properly. And worst of all, we start to wonder if it's us. Maybe I'm just not good with money. I hear this one all the time. Numbers not my thing. I've never been good with money. Or maybe I'm undercharging. Maybe I'm not cut out for this. Maybe I should just go get a job. So you're not broken. The system you're using is broken or it's not meant for your type of business. And that's what we're here to fix today. So the common cash flow traps in service-based businesses that we come across, and I'll walk you through the most common ones. I want you to just nod along if any of these sound familiar. Slow payers, you've done the work, you send the invoice and the money, well, still hasn't hit your account. And now you're scrambling to pay your own team or take your own salary. This one alone can wreck your whole month. And I see it all the time with a lot of my clients because most of our clients are service-based businesses. And a lot of them will have an engagement or arrangement with the contractors or associates that their invoice will get paid once the client gets paid from their customers. And most of them understand because it's quite common in a service-based business. You do the work and then you invoice. Especially if you're working with government, the payment terms are 30 to 45 days. And it's a long time. So if you engage contractors and have an arrangement to pay them later, once your invoice gets paid, well, that's okay. But if you're a big organization or you have people on the payroll, they need to be paid. And that can really have effect on cash. And then we have the other trap is the feast and famine. You land 5 clients in 1 week, you're pumped, you do all the work, but during delivery, you stop marketing. And now there's nothing lined up for next month. Sounds familiar? Well, the roller coaster is exhausting and it happens. The third trap is emotional pricing. you pull your rates out of thin air, or worse, you pick a number that feels fair based on what others are charging. You didn't factor in your taxes, your team superannuation, the tech stack, the admin, the client retention, the marketing, nothing. And then you wonder why the numbers don't work. Trap 4 is one bank account for everything. All your client revenue, your expenses, your taxes, and your own paycheck all flowing through the same account. You check your balance and think, looks like I can afford this. But surprise, there's actually not your money. And not separating delivery costs. This one's sneakiest. You hire subcontractors, associates, or VAs to help you fulfill your client work, but you never pull that money out before calculating profit or your owner's pay. So you think you're running a 20K a month business when really 6K of that is already spoken for. If you don't separate that money, it can lead to a painful wake-up call. So how does Profit First solve this? This is where Profit First comes in and changes the game, but we're going to add a critical layer that most people miss. So in the standard Profit First model, you take your revenue and split it into key accounts: profit, owner's pay, tax, and operating expenses. And that works to a point. But if you're a service provider who relies on others to deliver the work, there's a big mistake here. I mean, it's not really a mistake, but it's just we feel it's something that is missed. You're calculating all of that before subtracting your delivery costs, which should be treated like a product-based business treats cost of goods sold. So what's the solution? Add a consultant or an associate account. So every time money hits your account, before you do any allocations, pull out the portion that goes to people helping you fulfill your services. This is not optional spending. This is a cost of delivering your promise. And that money needs to be protected, not spent on software or a new course or whatever your business brain wants in the moment. This one change gives you clarity, margin, and peace of mind. So I'll walk through an example and let's bring this to life with numbers. So let's say you brought in $20,000 this month in client revenue, but you're paying $6,000 to contractors or delivery partners to help you serve those clients. That $6,000 is not your real revenue. So first, you move the $6,000 into the new consultant's account. Now you're working with the $14,000 in real revenue. That's what you allocate using the Profit First method. So this is what it might look like. So 5% profit is $700, 50% owner's pay is $7,000, 15% tax is $2,100, and 30% operating expenses is $4,200. Now you can see the difference. You've already protected your delivery team. You've protected your paycheck. You've set aside money for tax. Now you can run your business based on reality and not vibes. So what's the one move to make this week? If you do nothing else and you are a service-based business, then do this one thing. Open a new bank account and call it consultants or associates or contractors, whatever word you use. And every time a client pays you, immediately transfer the portion that goes to fulfillment into that account. It could be if you get a quote, say while you're doing the quote, you work out, okay, it's going to take 10 hours from this person and what their hourly rate is. So you transfer that money to the consultant's account. Some clients work on percentage base. They say, okay, 50% cost is for consultants. So if you get paid $20,000, $10,000 goes to consultants, and usually there's a buffer in there. So yeah, that's how I would suggest to split. And if you're not sure what the percentage should be, just start. You'll get better at estimating over time. The point is not perfection, it's clarity. And the sooner you build this habit, the faster you'll feel like a real CEO, one who knows exactly where their money's going and why. And for most service-based businesses, that means treating delivery partners, consultants, coaches as real predictable cost of doing business. Profit First with this one extra step gives you control, clarity, and confidence. And when you're confident with your money, everything else gets easier. So thanks so much for listening to the Money First CEO. If today's episode helped shift your mindset or gave you a clear next step, share it with a fellow service provider who needs to hear this. Until next time, remember, put your money first and the rest will follow. Thanks for hanging out with me on Money First CEO. If you got value from this episode, hit subscribe, drop a 5-star review, and share it with someone who's building their business too. All the goodies are in the show notes, and you can find me on socials, more tips and tools to help you. Until next time, keep putting money first and the rest will follow.